The market was looking past inflation and looking past interest rates, at least until it wasn't. A raft of very surprising news has dealt a blow to the Goldilocks narrative, which we've been talking about for a week or so. And that creates nervousness, uncertainty, and doubt. And with the run up that we've had, this nervousness leads to hedging, and that results in market retreat. Now the market is going to be looking for reassurance, and the only likely source of such reassurance will be published at 9:30 New York time tomorrow. This is Randy Kirk. You know what to do. Like, subscribe, notify. Huge program coming up on Saturday morning with Larry Goldberg. Original reporting, amazing stuff. Don't want to miss it. Of course, you want to join Patreon. You know what that does. You're going to get free books, free audiobooks, one for $5, two for $10 joining. Okay, let's get into it. Well, the market was all over the place today. It was attempting to place bets on tomorrow's CPI print. Now, a week ago, I told you that nobody was going to care about the CPI print because we've looked past that. In fact, I think I started saying that 2 weeks ago, or maybe even longer. I was the first to say that. Nobody else was saying that until I did. Now I know everybody, all these pundits watch my show and then they decide what to say. Anyway, maybe I'll be the first one to say, okay, everybody's paying attention to the CPI print tomorrow. No, I probably won't be the first to say that. Why are they now paying attention? Well, because the narrative broke down about the Goldilocks scenario when we got all this bad stuff happening with Moody's and et cetera over the last couple of days. News that was not expected. All right, so what's going to happen tomorrow? That's what we're going to be talking about. The Fed is interested in the entire CPI story. They want to see the details. They're going to look at the details. But the headline number for the economists and the stock market tomorrow morning will not be the same as the headline number for the Fed. The pundits want to see what the headline number is. That's the number that includes everything. The Fed cares mostly about the core. And that's the part of the CPI that doesn't include food and energy because those are so volatile. So what we're looking for tomorrow, the Fed wants it to be under the core to be under 2% year over year. Now, they're not going to get that number tomorrow, but we could look for the month to month being 0.17, which would give them a run rate of 2. All right. That's what I'd like to see happening tomorrow morning. That would be my favorite piece of news tomorrow. Well, the survey of the Wall Street types giving their estimates of what's happening tomorrow morning say that they're looking for a slight uptick in the headline number from 0.3 to 0.33 on the month over month number. And no, I don't think that's going to happen. I know why they think it's going to happen. It has to do with airline prices not coming down as much as they did the month before that. No, I'm sorry. Look deeper, guys, look deeper. I think we will probably beat last month. We will be under 0.3 on the month over month on the headline. And then they're suggesting that the core will hold at 4.6 year over year. I'm going for 3.9. Now, if we get what I'm looking for, we'll be looking at a 500-point day on the Dow. We'll see Tesla up $15. Now, are those real numbers? Of course not. But you know what I'm saying. It's going to be a really bonanza day. In fact, even if we beat by a little, even if the year over year is 4.4, 4.3, we could be looking at something like that. If we get the month over month at 0.17 on the core, we could see that kind of response. All right. But the numbers that the pundits are looking at, they would be fine with the Fed and probably result in no increase in September on the interest rates. However, do you know what has to happen between now and September? We have to get one more CPI report. We're going to get 2 more PCE reports. We're going to get one more jobs report or 2. I think I'm a little confused. 2 more. It's the end of August. One more jobs report, 1 more PCE report, and 1 more CPI report between now and when the Fed has to make their decision. So that's a lot of time and a lot of reports that could definitely affect their decision. So what do I think about these upcoming reports? Well, Truflation says that the year over year number right now is at 2.3. Okay. And that's for 45 days. They've had it right around 2.3. That's plenty of time to get the CPI itself closer to that number. And certainly the PCE, and then by the next PCE and the next CPI, the PCE at the end of August, end of August, we should be able to see those numbers starting to come into play. So core inflation should be under 3% by next month. And I think that will be we will have a surprise tomorrow on the low side. And all of that is going to add fuel to the fire. No increase in September and maybe a decrease in November, especially because I think we'll continue to see this trend downward to where we're going to be in the ones or maybe even between 0 and 1% core by the end of the year, maybe even into deflationary territory. The only holdup on that I can see would be oil. Oil is up again today, or maybe even today, but up yesterday. Anyway, it's now it broke out of its range. That's not good. Don't like to see that. If it keeps going up, it could start to be a problem. Right now, it certainly won't be a problem for this print. It won't be a problem for next month's print because it was going down in the previous couple of months. But over time, we could see that to become a significant issue. I don't think it's going to matter by September and probably not even by November, unless it just goes crazy, and I don't see that happening. Commodities are down. Housing will continue to be lower and lower and lower. That's going to be a bigger impact going forward. And the other categories, there's nothing suggesting we're going to see an inclination towards going up. All right. If there is any kind of beat tomorrow, and if housing shows disinflation, meaning less inflation, the market will have that big day that I was just talking about, and bond yields will drop under 4%, giving us another reason for the market to go up. All right. Well, Tesla will rise with all boats tomorrow on the good inflation news. But Tesla needs also some kind of its own news to get itself really engaged again. Cybertruck is the most likely thing. When is Cybertruck going to be handed over? Will Cybertruck be at pricing that we have been hoping for? Will the specs be what we hope? Will it look pretty much like everybody's expecting? I believe it will. That's all going to be, there's going to be an announcement. I would like to see the announcement be no more than 2 weeks before it actually happens. That would be nice, crisp and clear, not a lot of waiting around for it, or not a lot of speculation. Oh, well, it's 45 days away. Maybe it'll be late. Let's make it close in. The other thing that could move them, and that could move the market, of course, you and I both know that the announcement and or combined with the actual handover, if it looks good, could be 20, 30 points easily for Tesla. And then there's the Model 3 refresh. We've talked about that. If it looks good, I mean, really good, if the specs are good, and I don't know if you've seen my earlier video today with Brian Wang, but Brian had some news with regard to expectations on the pricing. If that kind of pricing comes in, and you need to look at that video, it could be really, really great. All right. So those are two things that could definitely get the thing started up again. Now, the leak in the boat on Tesla has been, of course, Zach leaving, a couple of negative stories about lawsuits and problems with cars, and then the China economic troubles. Now, these three, especially the China story, are something we need to keep an eye on, but especially the China story. Those other two will probably go away, almost certainly go away. New people are coming into the company, a lot of announcements over the last couple of days. I covered some of that this morning. But the China news should not be a problem. The China news is, okay, they're experiencing deflation. They're experiencing real problems in their economy. They have a real problem with youth unemployment. They have a real problem with their real estate market. Lots of stuff that's going wrong in China right now. And also companies moving out of China, looking for other places to make stuff, not necessarily moving out, but looking for additional places to make stuff. Long term, this is not looking good for China. Short term, it's not looking good for China. But in terms of the Tesla play, they don't need to make any more cars the rest of this year than they made in the same 6 months last year. That'll be plenty. So they don't need to increase. And they've opened up new export markets since then. So I don't think they're going to have any trouble making their numbers the rest of this year. And there's no plant expansion for next year either. If they add another 100,000 by being more efficient, or, because of the Model 3 being more efficient, et cetera, maybe they add 100,000, 200,000 next year. I don't think that's going to be a problem to make. So I don't think the China thing should really be impacting the stock, even though maybe the market might think that, but they need to look deeper. They need to listen to they need to listen to this channel. All right. I am going to be putting a video together on China and South China. Partially, I'm going to put that together because of a Connecting the Dots video earlier today. He asked the questions, why is Japan so resistant to BEVs? And one of the reasons was taken from The Art of War. And he says Japan has no interest in being beholden to China's stranglehold on materials necessary to make BEVs. So they're going the hydrogen route where they will not be beholden to China. Well, that caught my attention in a big way. He points out that China, we know, and that China has shown a willingness to throw their weight around with regard to their raw materials leverage, and they have that leverage on solar panels. They have it on lithium, refined lithium, on batteries, and rare earth metals. And Elon has been trying to get away from all rare earth metals in order to not have that issue. He's opening up his own refinery to get away from that issue. He's looking for lithium all over the globe, but everybody else isn't necessarily. And by 26, 27, as we move fully into the EV era and into electric era, China has set themselves up well. They played the chess match well, and they're going to have some leverage. We don't want them to have that leverage against the U.S. So today, the President Biden came under attack because he had flat out erred. We won't say lied. He erred in saying that he had issued some kind of an emergency proclamation with regard to global warming or with regard to climate change. He hadn't done any such thing, and he came under attack. I'm thinking maybe he does need some kind of emergency proclamation specifically with regard to the rare earths and with regard to lithium, with regard to, now we've got those two bills that are helping, but now we've got some NIMBY going on, not in my backyard. So sometimes maybe we need the Congress or the federal government to come in and a little bit heavy hand. I know I'm a conservative. I know you won't like that if you're conservative, but maybe just a little heavy hand to move these projects along, to move the permitting along, to get some of these local governments, to let up some of the environmentalists who should love all of this, but don't like necessarily mining, to get out of the way. All right. In a bit, so I'm going to do this video because I think this is part of Elon's big play in South Asia, and I'll talk about the details of my thinking. In a bit of good news, California says that 25% of all the cars registered last month were BEVs in California. It is impossible to escape the idea, the notion, the fait accompli that that's going to be true across the United States as we get trucks coming into the marketplace, as we get smaller cars coming into the marketplace. The rest of the U.S. is going to follow. And the 25%, of course, will be 100% by, I'm saying, 2027. I think you'll see that that's going to happen. As people see the cost benefit on BEVs, especially as they come down in price, game over. Well, Tesla followed its cohorts today through the ups and downs. And sadly, Tesla did break through the 244 level and ended up at 242. And I have no dry powder. I'd be buying for sure at this level. That is not investment advice. Do not do your own homework. Now, there is a resistance level at 235, but the real next stop is 217. If the numbers come in wrong tomorrow on the CPI, and I don't think they will, yep, we could easily be testing 217. Boy, I might find a way. I might sell one of my houses in order to get it at 217 again. Anyway, of course, I'm predicting, outright predicting, for those of you who say in the comments that I shouldn't be predicting, I am outright predicting the CPI will come in better than expected. I am, of course, hoping for 3.9 core year over year. And I think that we'll see Tesla up very smartly tomorrow. I'm saying this is not a prediction. It's like 15 points, okay? Like 15 points. Anyway, be sure to dig into the CPI numbers, and then tomorrow morning in my show, I will dig into those as quickly as I can. Sometimes it's hard. Sometimes you can't find it anywhere to really dig in soon enough because I need to start the show at 20 minutes of 7 California time, and sometimes it's just not up yet. But I'll try to do that tomorrow morning. So Check out my video with Brian. As I mentioned, you want to see that from earlier today. We talk on that show, we talk about the current state of the LK99, room temperature superconductor. And that story isn't over. So many headlines right now saying, oh yeah, we've proved it's wrong. No, there's no chance. Oh, see, it was just nonsense. Oh, they were either stupid or they were trying to pull the wool over somebody's eyes. No, none of that is true. Take a look at the video. You got nobody in the country that knows more about this in a reporting fashion than Brian Wang. And he's the guy, he's our guy for this channel. And he explains it in detail. Now, listen, if you don't want to watch the whole video, you can kind of figure it out for yourself. Maybe if you're a good scientist, you can figure it out for yourself by going to his channel, nextbigfuture.com. I mean, his blog, nextbigfuture.com. You should be going there anyway. You should be going there every day, just on everything having to do with science, because it's really, really good. Remember, you also want to take a look at that Connecting the Dots video that I talked to you about. I'll put a card for that as well. And then be sure to watch the programming this weekend. Larry Goldberg has got two things cooking. He's putting together the slideshow now. He's putting together the information. We're going to have a special guest, very, 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 very important guest you will not want to miss. So hit notify. And then remember, if you join Patreon right now, you're going to get one free book. If you join at the $5 level, you're going to get 2 free audiobooks. These are audio. These are not Kindles. These are not paperbacks. No, you're getting the full-on audio, the most expensive version. You get those for free when you join. And then I've mentioned a few times now, I don't know, maybe you're not excited about it. You know, the book that I was writing that I've decided never to write, and somebody said, boy, that's pretty funny, Randy. It's called Doing the Hard Things. Well, it wasn't that it was hard to write the book. It was I kept getting distracted. And there's a list, like I forget, 20 or 30 hard things that all of us are resistant to do. And I talk in there about not only the fact that they're hard, and not only the fact that we all kind of share that, but how maybe to overcome some of those, and how important it is to be able to overcome those if you really want to be successful in relationships, in your job, in your hobbies. Even it might even help your golf game. It wouldn't help mine, but it might help yours. All right. So you get that when you join Patreon. Actually, you don't even have to join. You can go up there for 7 days for free. You don't have to join. You can read the book. And then at the end of 7 days, you can say, you know what? None of this is worth it. But if it's worth $5 a month, if my show is worth $5 a month, would you join Patreon? It really helps the channel. And I've got a number in mind. We're 2/3 of the way there in terms of the overall income that I need from this channel. It's nothing like Steve and Mark Ryan. I don't need to make hundreds of thousands of dollars a month in order to make this channel worth it to me. Way lower than that. But there's a number, and we're about 2/3 of the way there. You joining Patreon, even though it's only $5 a month, it makes a difference. So please join Patreon. All right, that's all I got for you. Look forward to talking to you tomorrow morning, and it's been great talking to you today.